Most people spend hours picking the perfect insurance policy, then completely ignore the one little checkbox that actually saves them when everything goes sideways. We're talking about riders, those quiet, overlooked add-ons that sit at the bottom of your policy like fine print nobody reads, until the day they become the most important thing you ever signed. One family I know paid premiums for years on a solid life insurance policy, feeling responsible, feeling protected, feeling like adults, and then the breadwinner got seriously ill and couldn't work. And suddenly that policy they were so proud of did absolutely nothing for them while the bills kept coming. That's the trap, because having insurance and having the times right times insurance are two completely different realities. So let's talk about the rider that changed everything for them, the waiver of premium rider, which sounds boring until you realize it means that if you become disabled or critically ill and can't work, your insurance company literally pays your premiums for you, so your coverage never lapses. It's like your policy growing a conscience and saying, hey, you're going through enough, we've got this one. The reason most people skip it comes down to one thing. It costs a little extra, usually somewhere between 2 and 5% more on your annual premium. And in the moment of signing, that feels unnecessary. But here's the brutal irony. The people most likely to skip it are exactly the people most likely to need it, because they're already watching every dollar. Think about what actually happens during a serious illness or disability. Income stops, medical bills explode, and the last thing you can mentally manage is remembering to pay insurance premiums on a policy you desperately need to keep active. Without this rider, policies lapse quietly in the background while families are fighting for their lives, and by the time they recover, they're uninsurable. Now let's zoom out, because this isn't just a life insurance conversation. This pattern of ignoring protective add-ons shows up everywhere in financial planning, from homeowners policies, missing flood riders in flood-prone zip codes, to auto policies without uninsured motorist coverage in states where 1 in 5 drivers has zero insurance. We build the house but skip the roof, financially speaking, every single time. Historically, the families that came out of major health crises in the 1990s and 2000s without financial devastation almost always had some form of income or premium protection baked into their coverage. It wasn't luck. It was a decision made years earlier that felt small at the time. The ones who lost everything weren't bad planners. They were just one rider short of a different outcome. Here's a misconception worth smashing right now. A lot of people think their disability insurance through work covers this gap, but employer group policies are often limited to 60% of base salary, exclude bonuses, and disappear the moment you leave that job. Your insurance rider stays with you regardless of employment status, which in today's gig economy and era of layoffs is not a small thing. The practical lesson is straightforward. When you're reviewing any policy, life, disability, long-term care, ask specifically about the waiver of premium rider, the accelerated death benefit rider, and if applicable, the guaranteed insurability rider, because these three form a protective triangle that keeps your coverage alive, accessible, and expandable through life's worst moments. You don't need every rider on the menu, but ignoring all of them is like buying a car with no spare tire because you've never had a flat yet. The discipline here isn't complicated. It's about making one slightly more expensive decision today so that future you, who is stressed and sick and scared, doesn't have to make impossible choices. Process beats conviction every time, and a boring rider selected calmly in a broker's office will always outperform a panic call to an insurance company mid-crisis. There's real humor in the fact that we'll spend 3 weekends researching the best coffee maker, but give our insurance policy about 11 minutes of attention before signing, and the coffee maker decision has essentially zero financial consequence, while the insurance decision could swing your family's net worth by hundreds of thousands of dollars. We are, as a species, wonderfully irrational. What this really comes down to philosophically is the difference between hoping nothing bad happens and preparing intelligently for the reality that something probably will. Discipline, proper sizing of your coverage, and consistency in reviewing your policies annually is a complete strategy, not a pessimistic one, but a deeply optimistic one, because it says you believe your future is worth protecting. The family I mentioned at the start, they eventually did add the waiver of premium rider on a new policy after that painful experience, And 2 years later, when a second health event hit, their coverage held firm without a single missed payment. They didn't win the lottery, they just made one smart decision at a table with a patient broker who asked the right questions. Whether you're completely comfortable with where your coverage sits right now, or you have that nagging feeling you might be one checkbox short of real protection, the move is the same. Sit down, review your riders, and have an honest conversation about what your policy actually does in a worst-case scenario versus what you assumed it did. And if we can help you navigate not just insurance decisions, but real estate investing, home contracting, or finding the right lenders for your next move, check out our links in the description below.